Hello, traders. It is the 1st of July, 2019. It's 8 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1547. This morning, unless you just opened your eyes, uh, we have a pretty strong pop higher in equities. We have a push due to the G20 summit ending in a peaceful and friendly tone. The market is in a risk on sentiment. We have a gap up in the U.S. equities. Just everything is hunky dory. U.S.-China trade truce boosts risk appetite, but analysts believe intellectual property issues unlikely to be solved in the talks. Major European PMI manufacturing data, none beat. The Eurozone, Germany, France, Italy, and UK missed. And then also OPEC said to extend production cuts for another 6 to 9 months, giving crude oil a bit of a boost this morning. The leader is crude oil up $1.53, trading at $60 a barrel, up 2.6%. The Nasdaq's up 141 points, 1.84%. The DAX is up 163 points, up 1.32%. And the Russell is up 18.8 points, up 1.2%. The S&P has a 34.5 point gap. And those of you who are here on Friday on the close, the S&P just tore it upwards into the close. It was basically trading at about 29.40, and it finished at 29.55, and yet we are still 34 points higher. This is pretty strong. Gold is taking a bit of a hit. Gold is the laggard today, trading sub 1400. Down 1710, trading at 1396.60, or down 1.21%. As safety assets, except for the Bund, which is up just 4 ticks, the safety assets are all below zero, below Friday settlement. The bonds are down 15 ticks, and the 10-year notes are down 7 big ticks in the futures. So that's where we are. That's where the market sentiment is. Hopefully you can hear me loud and clear today. No distortion. Um, let's take a look at what we've got coming up. We did get some key figures, as mentioned. The manufacturing PMI, consumer confidence in Japan came in weaker, 38.7 versus 39.2. And what's remaining for today is we've got at 9:45 Eastern, 15 minutes after the open, we have market manufacturing PMI final. This is a low impact number. The prelim is higher impact. But we do get ISM manufacturing PMI at 10 Eastern, or a half hour after the cash open, expecting 51, and construction spending as well, expecting 0.1. And so that's where we stand this morning. The cable, let's see where that is. The cable is down 0.35% from Friday's settlement, trading at 127.05, just a little bit off. There's also the European Council meeting today at some point. It doesn't give a day. A big reminder this week, rollovers behind us and a month is behind us. However, ahead of us is the 4th of July holiday on Thursday. The markets are open till noon in the futures. I will not be here. I'll be working, but I will not be doing a trader bite. I will not be trading. And so just pay attention to the fact that on a good part of this week, in fact, many people are off Monday, Tuesday, Wednesday, Thursday, Friday this week. You get 10 days for the cost of four vacation days for those who work in the industry. So I expect the volumes likely to be fairly light and the trade to be fairly choppy. I expect that Wednesday after the European close, maybe a half hour after that, the noon Wall Street time onwards is likely to be very, very quiet. At least here in Chicago, at that time, you'll see all of the boats and yachts and stuff are in the boat pen on the lake at that point with music blaring and alcohol flying around. So I expect people to be leaving early on Wednesday. Expect the trade to be fairly quiet from about 11 Central, 12 Eastern onwards on Wednesday. This is just to get your mind in the right place. Again, Independence Day on Wednesday. I believe Canada's Independence Day or Canada Day is today. So that's where we are. What did we expect on Friday versus what we got? Here's the expectation on Friday was looking, the primary scenario was looking for us to open around 29.38. The expectation, if you follow the green, which is the primary scenario, the expectation is to pull back to the high of the prior session at 29.3275 or so, and then looking for a bounce higher. But I did expect the market to go sideways. I expected it to push both sides of the IB, and I expected it to go sideways. This is what we actually got. This is what we actually got. We got a pullback. Here we go. We opened at 38, and we got a pullback right at the high, and we pushed to basically what was expected. Push into 29.4475 and holding sideways. I expected scenario one to close here. Again, this is what the primary scenario was looking like. Just a push down to the prior high down here, and then a push up and hold sideways. Except that Friday, you could see that at this point, the closing bar had a tremendous amount of volume. Uh, However, it was the end of quarter, end of Q2, end of month, total window dressing. It's very interesting to see that much volume come in and for price to kick up from about 29.38 all the way up to 29.48, but with the delta being negative. Look at this. The delta here, if you look at this delta bar, let me extend this a little bit to see what's going on. Just a tremendous amount of volume. But overall, that this bar ended up being negative, so it pushed. Buyers came in, pushed, and when they pulled back, it pulled back strong, giving us a negative delta. And then the following bar was lighter in volume, still heavier than the 20-day average. This black line right here, the black line within the bar tells us for this 15-minute time slot what the 20-day average is. It's still higher than the 20-day average, but the market really lifted. The market really lifted. Did not. I had warned in the Convergent chat room that not to fade the close, but this really took off on pretty decent volume. The pullback was in price was pretty low, but in delta was pretty strong. There was quite a bit of selling once it pushed the new high. We ended up Friday. We ended up with a non-neutral day. We had a normal variation day with an odd-shaped profile. The profile on Friday had a very weak low and multiple distributions before it took off into the close. And it closed near highs. The expectation is for a drift up, although it didn't. I didn't expect it to have much energy to continue the drift up. If we look at this on the trigger chart, you could see that the push up was pretty decent. The pullback was somewhat tradable, and then from there, 3 o'clock is the close right here, and then from there it just completely ran up into the close. So it's overall it's a pretty strong close, but very little volume in the profile on that close. From there, We come into today with a gap up. We gapped up from 29.54.75 to 29.70, about 15 points. And we tested higher to 77.50. We tested lower, didn't close the gap in the overnight session, and have been pushing, basically hugging the high here, unable to fall below mid once it crossed above. This is a P-shaped profile, looks like short, um, short covering potential. We moved away from the stem and have been holding near the upper distribution with the point of control in the upper quartile of the range above mid. And so we are holding steady with a weak high. It's looking like it is not done. It's not likely to be done to the top side. The volume is okay, 263,000 versus about 158,000 lately. I don't want to say average because I don't believe in averages when it comes to the markets. I think averages don't describe market or human behavior, but that's what we've got. Now, looking at what we expect for today, let's set these charts right. What are we expecting for today? Here we go. For today, we are way up here. We are in new all-time high territory. What does that mean to us? It means that we don't have any frame of reference or prior reference. We don't have any volume profiles from the past. We don't have anything to go on to compare the current action to prior. Not the ideal situation for the way that I look at the markets. And so we're relegated to more kind of projection type rules. In other words, measured moves, measured move extensions, which are based on fibs, finding energy and finding where that energy is likely to be expended in terms of price. That's where we are today. So as we look at today's action, ding, 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 ding. Okay, as we look at today's action, the expectation, by the way, this gap is still pretty substantial. We have 23 points, I believe, in a gap. What is it, 33 points? Yeah, 23 points. 24 points. It's currently the expectation is this gap zone is not going to be filled. The probability of a gap fill, and there's the population or the N in this statistic is not very high. The probability is relatively low that we would fill in this entire gap all the way down to 29.54.75 yesterday, the Friday's close. The expectations for an open auction that immediately pushes higher. I expect the market then to find sellers, push down potentially into this 69.70 area before holding steady and sitting sideways. Whatever there is to digest, the market's already digested it in the overnight session with the gap up on the open and the continued tests higher. And I expect with a weak high that the market is likely to continue to hold higher prices. I'm not seeing anything that is likely to threaten that. The secondary scenario is we get responsive selling, which is the more common behavior of the market. I expect responsive selling that ultimately ends up giving us an impulse taking out the overnight high for a continuous grind higher, but I'm not expecting much range or volume to follow this grind higher. The millennium figure is just above us at 3,000. It's about 20 points away. It is just below what we would expect to be a day's range. But overall, in this kind of environment, we've seen the market test up, down, and go sideways until further news is brought in. So at the end of the day, I expect us to keep a gap open, a gap zone open down here and not to attack. So let's not get too excited. A couple things to note in this type of scenario. One, we're in all-time highs. So there's an elevated probability of an open drive or an open test drive, and that could be open drive responsive, meaning selling, or an open drive initiative, which means we gap and go, and that if we get an open drive, in other words, if this morning, and that'll be scenario 3, is an open drive. This morning, if we open and start driving, in other words, moving away from the gap with volume, strong delta, pushing away from Friday's range, then no selling, and the probability of capturing 3,000 today is very, very high in that scenario. So open test drive, open drive, because we're out of balance, those are very strong possibilities today in all-time highs. Okay, pay attention. Don't let your emotions trade for you. If you don't have an edge, you don't have to trade. That's one of the benefits of trading your own accounts. You don't have to produce. You don't have to answer to investors or anything like that. You can sit and wait for your edge to show up. If there is no edge for you in this kind of market, then walk away. Go do something else today and come back and see if there's overlap tomorrow that you can trade off of. Good luck today.